All right, ladies and gentlemen, welcome back. Good afternoon. It's the 12 p.m. trading room. All right, 12 p.m. trading room. Welcome back, everyone. I just wanna get my camera right. Just give me 1 second, guys. I just wanna get my camera sorted. I'm not sure why it's not appearing. Yeah. All right. Let's do this. All right. We will start our session shortly. Yeah. All right, there we go. 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 All right, guys, welcome back. Good afternoon. Welcome back. Welcome back. We've got AV Trader, Particles, Tanya. Happy Thursday. Happy Thursday. All right, happy Thursday. Great stuff. So let's get right into it, guys. Remember, the details are on the chat. If you're joining us for the first time, you want to open up an account. The links are on the chat, right? Our Academy website, the TD Market website, the TD Market Exchange website, everything is on the chat, right? So we're going to get right into it. I just want to make sure. Okay, there we go. All right. Cool stuff. Cool stuff. Cool stuff. Cool stuff. Cool stuff. Cool stuff. Let's do some updates, yeah? Let's do some updates. All right, so what are we looking at? We are looking at gold and silver. So if we look at the 4-hour time frame now on gold, all right? So obviously we broke structure, and this is now what's happening right now. So you see, with this price action, I would anticipate that price is going to retest before it continues down. That would be my anticipation here looking at gold. But now this low also is, this low is sticking out like a sore thumb. So where the market is right now, it's still on this low. So I would anticipate you're going to go up for the retest and then continue down. If you go to the much lower time frames, this is how it's looking. So this would be a correction for me, all right, before we continue going down. That would be a correction for me, all right. So we're still keeping a close eye on gold, guys, all right. Let me quickly go to silver. Between gold and silver, I think for me, well, I want to catch both of them, but in terms of the current price action, this is the 4-hour chart. Yeah, I would anticipate we're going to do this. Like, for instance, you see the structure here. So my thoughts would be we're going to go back to the structure. All right, we're going to go back to tap the structure. And once price gets to the structure, I wouldn't just blindly enter the trade. No, I would wait for some rejection. I would wait for some 1 hour, 4-hour candle rejection. You know, I want to see weeks like this. If I can see weeks like this here, then that would be the rejection I'm looking for. All right. So this would be my anticipation of price right now. This would be my anticipation of price at the moment. Yeah. So going back to gold, the same thing. Gold, the same thing. I would anticipate you're going to go back and retest structure. So the 4-hour, the daily, nothing much. The 4-hour, the something. The 1 hour, definitely we're going to get some more price action on the 1 hour. Yeah, I would look at this area. I would look for some rejections on this area, on that area. Silver on the 1 hour, same thing. I would look for some rejection on this area. You see that? So this is how gold and silver is looking at the moment. They are both on the low. They are both on this low. So you see now, guys, the most ideal setup. In fact, let me explain this point this way, right? I want to explain something, guys, something to you guys, which will help you understand how I look at things. So in terms of the entries and the setups, gold and silver is a perfect example of what I'm about to say. So this is how I look at things, right? In terms of the setups, you tend to get the most ideal setups, right? The most ideal setups. So these setups, I would call them like the high probability setups, right? High probability setups. Right. You tend to get this. And then you get setups that are not ideal, right? You tend to get like 50-50. I like to call them 50-50 setups. I'll explain what that means. All right. So as a trader, what you want as a trader, every time you open your charts, you are looking for this as a trader. You are looking for high probability setups. But now there are times where you're going to get the low probability setups. Let's call it low probability setups. Now, this is what experience will teach you guys, all right? This is what experience will teach you. So, you get your high probability, low probability. Now, the high probability setups, they don't just happen every now and then. They take a bit of time. Why? Because they are high probability. What happens there is that things need to align together for that setup to become high probability. And then you get your low probability, where it's those setups where they just form every now and then. You see this, guys, this can be the same setup, right? These setups can be the same setups. But with that, you get the most ideal and you get your 50-50. What do I mean by that? Let me show you gold. Okay, we are on silver right now, right? Let me show you silver. So you see silver, the setup I'm showing you right now, to me, it's a low probability setup that I'm showing you. Why? Because if we want to sell, we are not looking for this situation. Look at this situation. You've got a bounce, price went up, price is bouncing again. Nothing stops price from doing this. Nothing stops, even if we are looking for shorts, nothing stops price from doing this. So now this to me would be a low probability setup, meaning it might work out, it might not work out, low probability. Now, what would be a higher probability setup for me? It would be when we break this, it would be a break of this. Once we break this, so you see on this particular one, guys, on this particular one, we're looking for a retest of this, and then we're looking to sell, to short, if we get some rejection here. If we get rejection. So the very same thing, imagine if it happens here. The very same thing, imagine if it happens here, where you get the break of this and it happens. This to me would be a high probability setup, because we have breached this area. We have broken out of this area, this support. Look, you have this. You've got these two. Same setup, guys. Same setup. But one is low probability, one is high probability. Now, this is what experience will teach you. All right. So, what does this mean now? Does this mean you leave out the low probability, you wait for the high probability? Well, this depends on a trader, right? This depends because we are different. So with the low probability ones, this is where your risk is low. Every low probability setup, your risk must be low. And then a high probability setup, that's when now you would look to take advantage of that, you would look to do that, take advantage of that. So experience will teach you these things, right? Because in the beginning phases of your trading journey, you are focused on knowing where the entries are, right? Knowing the setups and all of that. But as you continue trading, you will then begin to realize that there's such a thing called probability. And sometimes you've got your low probability entries and your high probability entries. So my ideal setup here, my ideal setup would be this one. My most ideal would be this one, where we got the break of this support become resistance. But I'm not leaving this one out because the low probability one can be like it can give us early signs that we're going to get a high probability entry. All right. Hey, good afternoon. Everyone who just joined us, good afternoon. All right. So think about this, guys. High probability, low probability. And now how do you know if what you're looking at is high probability or low probability? Whatever you do, when it comes to your entry, whatever you do, you are looking for a situation where there is momentum before the market shows you your entry. Now, momentum can be this. You see the break of the structure here. That is momentum. So what I'm saying is, before I would look for a buy in this situation, I want price to break the previous structure first and give me enough momentum. Then any pullback that forms after that, I would look for a trade. Any pullback that forms after that. You see that? So it can be something like this. There are different ways to do this, but looking at structure, I would look for this. So for a sell, I would first wait for price to break out of the structure. Now in the morning, the structure we spoke about in the morning was this one here, right? And then you have this structure now. Now someone can get confused. Now what is going on? No, relax, right? We could still get a trade here, but this one I would consider that a low probability and this one a high probability. There. Do you leave out the low probability? Do you wait for the high probability? Low probability, you can go in with a small risk. And then if it plays out, then you've got the high probability one, to go in with your normal risk. All right. So just a nugget there for you guys. All right. So silver, looking for a continuation down. Gold, looking for a continuation down. You see where gold is also. You see this low here, right? It's sticking out like a sore thumb, right? So I would want price to break. Let me show you guys an example of what I'm talking about. So Euro GBP, right? So I've been swinging Euro GBP. You guys know when I executed this trade, Euro GBP, right? Now I took another trade on Euro GBP there, where the market is, basically. I took another trade. Why did I take this trade here, right? Because what we see on Euro Pound right now, it is a continuation pattern. Euro Pound is forming a continuation pattern right now. So which means there is a trend continuation. This is the trend already. The trend is going up already, right? So this is a formation. It's a trend continuation formation. You see that? So that's why I took another, and you see this pattern. I'm not going to get deep into this pattern and why the entry is there exactly. That is for our education, right? Oh, by the way, our education sessions have started. They've resumed. This morning at 10:30, we had a session. So at 1:30, there's another session. At 4, another session, right? If you received an email, you would look at the times there, right? So we had some clients this morning. Good. And yeah, if you guys want some education, care@tdmarkets.com, let us know. And then that is the email, care@tdmarkets.com, all right? And then, yeah, we're going to show you all of this. So with Euro Pound, right? Where euro pound is right now, this structure is complete. This correction is complete. So from here on, probabilities are high that we're gonna go up. That's why I took a buy where the market is right now. Right there. It hasn't really moved. Yeah, I'm gonna wait for it to move. It hasn't really moved. So yeah, waiting for that. All right. So back to my point, the market broke the structure. The market broke the structure to give us a new structure here. So what is this? This is the impulse. You've got the impulse, you've got the correction, and then according to structure, we should be getting the next continuation, the impulse towards the upside. All right. So yeah, so euro pound anticipating momentum towards the upside. You can have a look at this as well. So yeah, gold and silver, just gonna wait for them. A continuation down. All right. A continuation down. The commodities, let's have a look at US30. Yeah, look at what US30 is doing now. We spoke about this in the morning. All right. So US30, this candle closed very bullish. So I'm looking for price to correct, and I'm looking for a continuation up. Right. I'm still swinging US30, by the way. I'm still swinging it. So looking for a correction and the continuation up. There. Right. I think my next trade is gonna be somewhere here. It's gonna be my next trade somewhere here. Somewhere there. All right. So let's look at the M15. Yeah, the M15 is correcting. So get the correction and then a continuation towards the upside. So US30 hasn't changed, yeah? NASDAQ still has to break. So you see now here, I would wait for a breakout. So whatever is happening right now on NASDAQ, to me, that would be a low probability setup. You know, it would be a low probability setup to me. So yeah, so I would want a push towards the upside first, and you know, an impulse, a correction, and the continuation up. So that is US30, NASDAQ. All right. Let me do this. The yen pairs, let's quickly have a look. Snap. Okay, so have a look at Euro JPY. Let me look at dollar JPY. Okay, dollar isn't broken. So Euro yen we've broken out. Right? So yeah, so as long as we've broken out, we're likely gonna go up. As long as we've broken out, we're likely gonna go up. So Euro yen is starting to go up. You guys must be careful of this high. All right. We also need a break of that high. If price rejects there, it will likely be a break-even trade. If price rejects there, right? So I will look for. Let me see. Yeah, Euro yen is starting to push up. Just be careful of that high. USD JPY has not broken out as yet, but it's coming. It's coming, right? It's coming. CAD JPY has not. GBP JPY not yet. NZD JPY is rejecting that area, right? So the yen pair is still the same. Still the same. Nothing has changed there. Nothing has changed. I was checking out USD. Let's have a look. So USD ZAR. I see USD ZAR didn't go up as per the previous analysis. So it went down one more time. So let's have a look. Let's see. USD ZAR. So USD ZAR has come back down to the bottom of the structure. So this structure here, it has come back down to the bottom. It seems like this was the last leg. All right. We also have some demand, some weekly demand zone down here. So what I would do here, if, you know, I think I would look for a buy. I would definitely look for a buy here, right? I would want price to reject this area. As long as we have broken this low, anywhere below this low, I would anticipate a rejection. Right? And then once we get the rejection, I would look for my setups on the 1 hour time frame. I think the 1 hour, yeah, the 4 hour, 1 hour, I think that will do. So yeah, so that is what I would look for. So first I would wait for a rejection to form on this demand zone below this low, and then any move towards the upside, I would want the 1 hour, 4 hour structure. Basically, I would look for my setups on the 1 hour, 4 hour, right? The 4 hour, 1 hour structure is still very much bearish. You can see that, right? So once it changes from this bounce, we get a change of structure, then yeah, you know, that will be my setup basically for a buy. So that's how it's looking right now. It came back. If it happens that it breaks this demand zone, because sometimes the market does break supply and demand, right? It does break them. If it happens that it breaks this towards the downside, then that means it's coming back down to this low, right? I don't think there's going to be a trade for me if it does that. I will sit and wait and watch what's going to happen on this low. On this low here. So it's on the demand zone right now. The first thing I would look for is a rejection for some longs. But if this demand is not strong and price breaks it, then it's coming back down. So for me, this break, I don't think I'm going to get a trade on this break. I would wait for it to come back down to this low and see what's going to happen on this low. If we reject this low, then I would look for some buys. So this is how it is looking at the moment. Yeah, this is how it's looking at the moment. So that's what I would do, basically. That's what I would do here. Yeah, so that is USD ZAR. USD ZAR. Your thoughts on GBP NZD? GBP NZD, I think we spoke about, what did we say last time? Let me try and remember. Oh yeah, now I remember. All right. So GBP NZD, you know, it completed this cycle. So this cycle is done. All right. So now it seems like we're getting like a rejection from that cycle. So we would look for a new cycle towards the downside. All right. So now with this one here, I would look for a lower high. So this would be my impulse down. What's happening here is that we're trading in between this. We're trading in between these two highs. In fact, it's actually three highs. You know, we're trading in between these highs and this low. So now my direction here would be downside. That would be my direction, downside. All right, because of how aggressively price went down, where it's coming from, and the structure it's trading in right now. So GBP NZD, it looks like, you know, I think it's still bearish. Still bearish. Still bearish. Yeah, so I would still look for a lower high and look for a continuation towards the downside. Yeah, anywhere around here, I would look for a continuation down, anywhere around here. So GBP NZD, it broke and then it's correcting at the moment. So I would look for a continuation towards the downside. Yeah. So this one, and my sell, I would sell projecting that we're coming back down here, right? Looking at where we're coming from, I would look for a sell projecting that we're coming back down here. But obviously there is going to be some take profit levels in between, you know, take profit levels in between, like that. So that would be my view. Look for a lower high and then start to look for my setups after that. Yeah, that's what I would do. Right, look for a continuation down. Let me look at GBP AUD while we at it. GBP AUD. So here I got a break even trade here, right? I took a sell and then I got a break even trade. So GBP AUD has not changed as well. I'm still looking for this. I'm still looking for this. And right now there's a correction that's forming now, right? That correction is becoming very big. So very simple. On this one, very simple, right? We get a break. I would look for some downside. Here. So I wouldn't anticipate price to go up according to where price is coming from. The structure is still bearish, all right? Structure is still bearish. Now price broke out of this. It broke out of this. If you go to the daily time frame, you'll be able to see it better. So price was ranging, consolidating, spiked, consolidated, came back down, and then gave us a lower high. So definitely there's a structure shift here, right? So any move towards the downside, this would be one of the TPs here. And then definitely here, one of the TPs here. Definitely right there. Right. Yeah, this is what I would look for. Here. The Euro AUD is still active though, right? The Euro AUD is still active, still swinging it, break even now. So the GBP AUD looking for some shorts. Yeah, that's what I would look for. So GBP NZD, I would wait for a lower high and then one more push down back to this low first. And then from there, we'll see if it continues to go down. So that's GBP AUD. Yeah. All right. All right. Yeah, so watch out for the yen, guys, right? Watch out for the yen. Have the yen in your watch list. You guys have seen, when it comes to the yen, I think I've got a solid strike rate on the yen. I think I've got a good strike rate on the yen. When I started trading, I used to trade the yen much when I started trading, right? Because the yen, and this is still the case now, if you go back to like 2017, that era, 2017, 2018, I was trading the yen too much around that time because the yen has simple price action. When people ask me, for a beginner, which assets must they focus on? Which currency pairs must they trade? Because there's a lot of noise. People are talking about gold, NASDAQ, all of that. As a beginner, what must you focus on for you to get the experience and for you to know, and get an idea of the market? What I tell them is that, look, the yen is a simple pair to trade. It doesn't matter whether it's dollar yen, euro yen, pound yen. It's very simple because the movements are very simple. The movements are straightforward. The patterns, the formations are straightforward, right? It's rare that you get, well, for me, it's rare that I get something that is out of the ordinary on the yen. It's just simple patterns. If the yen is correcting, giving you a corrective pattern, you will see that corrective pattern, and it will be straight to the point. All right. So the yen, don't sleep on the yen. Follow the yen, right? I think I've got a good strike rate on the yen, and I like looking at the yen, right? It's a very simple currency to trade against other currency pairs. I mean, against other currencies, right? Of course. So your euro yen, your pound yen, nice price action. And then from there, that's when now, when you get used to the markets and how the market moves, the flow, that's when you can add other pairs. Right? You can then start adding gold. You can start adding your commodities, your indices in. But as a trader, you need to have currency pairs or a currency pair that that you have mastered. That you've mastered, right? You need to have that. It can be 2, it can be 1. I know a lot of professional traders, right, that only look at one thing, right? I know one professional trader I've been following for some time that only looks at GBP JPY, and then obviously other ones they would only look at gold, and that's what they do, guys, right? You don't have to trade every single thing. Get your just a few pairs that you believe you can master. Try to master them and understand how they tend to move, right? And you're gonna have them, and then every now and then you can just add other currency pairs in the mix. But if things go sour, then what do you do as a trader? You go back to the currency pairs you've mastered to take you out of that situation. You see how it is? So keep that in mind, right? Have the ones you can master, and then you'll see. Have the ones you can master. All right. So don't sleep on the yen. Look at the yen. Looking for upside. USD JPY. Looking for upside. CAD JPY. You see what's happening. A break is coming. NZD JPY. A break is coming. So look for your setups there. Don't sleep on the yen. The yen is the most simplest pair or currency, but let's say currency pair. Most simplest currency pair you can trade. Obviously, it needs to be the yen against something. Don't sleep on the yen, guys. All right. So let's just loop back quickly. NASDAQ US30. NASDAQ is about to break. Keeping an eye on NASDAQ. US30. I'm just looking for a lower time frame correction here, and then a push towards the upside. That's what I'm looking for. So as long as we've broken out, looking for a continuation towards the upside. First, back to that high, right? If it breaks that high, where is this going? It's going all the way up there. You see how it is? So yeah. So commodities will not sleep on the yen. Might as well be a Japanese. Yeah, no. We might as well. So this, well, what I'm saying is this is what I've seen work, and this is what worked for me. But if you love gold, as an example, if you love gold, you like looking at gold, you like gold, try to master gold, right? If you like gold right now, try to master it. And once you master it, you will see, right? But you see now with gold, you have to be patient with the movements of gold, because what happens with the commodities, when they move, they really move. But before they move, you might have to wait a little bit, right? So you need to understand that patience is going to be very important. In trading, patience is important, but with gold, I've seen that it needs a lot of patience, all right? It doesn't matter whether you're looking at lower time frames, 1 minute, it needs a lot of patience, right? So if you feel like you love gold, then try to spend some time on gold, try to master it, but also you need to understand the principles of price action. You need to understand market structure as well. So that is still important. You need to understand market structure. But in mastering gold, you will start noticing how gold tends to move. You will start noticing the levels gold tends to respect. You see these price levels, you'll start noticing which price levels gold tend to respect the most. You see how it is? You start noticing these things, right? It takes a bit of time. But yeah, so try to do that. If you don't know which one or what to choose right now, I would suggest you include the JPY in your pairs. Include the JPY. You will see. And spend some time on the JPY. You will see. Right? Generally, the yen is weak generally because of low interest rates. So you've got the yen versus the dollar. You've got the yen versus pound. All these other currencies are stronger than the yen. The yen interest rate is low. It's an attractive pair to sell. Attractive currency to sell and buy other currencies, right? Carry trade. We're talking about carry trade. You're using the yen. You borrow from the yen to buy high interest rate currencies, right? To get a higher yield. So the yen naturally, or not natural, but generally, for some time, it's been weak against other currencies. That is one aspect that makes the yen very simple to trade. So which means you're just gonna, your swing trade. Let me go to USD JPY. Let me show you this. Let me go to the weekly, and this is what makes the yen very simple to trade. Okay, so this happened post 2010. So this happened after 2010, right? I don't know the reason why. I don't know the reason why it went down, to be honest. I don't know. But from 2010, it's been more than 10 years now. Price went up. So it's weak. This is the USD JPY. So this doesn't matter the time frame. This can be on the 1 minute. It can be on the 5. It doesn't matter. What matters is the structure. So my point is, on the yen, your focus would be to swing to look for a buy swing trade. Your focus would be to look for a buy swing trade on the yen. Buy swing trade. So every buy that you get, you must take it as a swing trade. Some will not be, some will be. But if you're looking for a buy, it has to be a swing trade there. Because if price moves like this, probabilities are always high that price will continue going up. But then you know what's going to happen. As part of structure, you're going to get moments where the market does this. Moments where the market drops like this. You see that? And look at how sharp these drops are. Look at how sharp that move is. You're going to get times like these. And at that time, it might look like the trend is changing because of how sharp it looks. It might seem like the trend is changing. But understand that yen against the dollar is more attractive than the yen. Interest rate differentials. The interest rates of the dollar is more higher than the yen. So the dollar is more attractive than the yen. So investors would want to hold the dollar and sell the yen in this case, right? Investors. And we're talking about, remember, you and I are retail traders. We want to follow what I don't want to say big boys, but we want to follow the money, right? The money can be big boys. The money can be, we want to follow the money. So the yen being low in interest rates, it makes other currencies attractive. So therefore, what happens? They tend to sell the yen and buy the dollar, buy the pound. So this is the long-term move we would get, right? Up until a time where the yen interest rates is high, up until the time. Because on paper, in theory, a currency with high interest rates attracts a lot of investment, right? That's as per the theory. And we can see with the USD JPY. So for as long as interest rates are lower, the yen interest rates are lower than the dollar will always be attractive. So your swing buys, your swing trades will be buys here. And then whenever you find things like this, where the market goes down like this, just remember the fundamentals. That will guide you. Can you still take advantage of this? Yes, you can. When it drops like this, you can. But you know what? This will not be a swing trade. This will be a short term. Short term sell trades. When the market drops like this, these are short term, right? Don't take this as long term. These are just short term. If you want to trade them, of course, right? But your swings are these ones there. You see now, what I've just given you is a plan. It's a plan for USD JPY. That's what I've just given you right now. Now, it doesn't end there, of course. It goes a little bit deeper now. Where do we find our setups? You know, technical analysis. It goes deep to technical analysis. But as long as you understand the view, then I think this should put you in a better position. All right. You look at euro yen. Euro yen, let's do this. Right? Look what's been happening on you. That's why I'm always looking for buys to sell the yen. Look, price has been going up, okay? Price has been going up post 2010. Price has just been going up. Same thing. GBP, JPY, same thing. All right. So yeah, so definitely have a look at that. Have a look at that. So let's see what the commodities are gonna do today, guys. Looking for some shorts, gold and silver. And then yeah, I think we've got some really good setups. All right. I hope this will help you. I hope this will guide you. And yeah, let's push. Don't forget to smash that like button, that subscribe button. Don't forget to smash that button. We are gunning for 10K subscribers now. All right. But yeah, guys, this was happening so far. Let's do this again later at 3. Let's see what's going to happen later. But look at the yen. That's all I'm going to say. Look at the yen. That's all I'm going to say. All right. Great stuff. I'll catch you guys later, yeah? Have a good one. I'll catch you guys later. Cheers, guys.